Hello and welcome to the Billion Dollar Broker Podcast. My name is Ross Lacane. I'm bringing my 25 years industry experience together with leading experts around the globe to give you the insights on how to live a better life and grow a profitable mortgage broking business that you are proud of. Welcome to another edition of the Billion Dollar Broker. We've got a really special guest and a good friend with me today, Chris Raymond. He's the director and principal broker at Unconditional Finance. Welcome, Chris.
Thanks, Ross. Good afternoon.
You've had a really successful and, with a lot of the top brokers I speak to, it's relatively short career, but you've managed to, for the last 3 years, be in the top 100 brokers. You're in the top 6 brokers with SFG. Keen to get into it. You've got so much value to add to the audience. So really keen to get into it. But just tell me how you got started in the broking industry.
Yeah, good question. I mean, I've always been in the third-party space. When I left school, it's probably showing my age now, but in the early 2000s, first job out of school, it was working for a bank, not in retail. I actually went for a funds management position at ING, of all places, and they said, sir, I don't think you're experienced enough for that. And, we've got a new department being mortgages, and we think you'd be a really good fit for that. So that's where my mortgage journey really began. So, entry-level position, doing loan documents and stuff like that. And then, moved over to a major bank in sort of mid-2000s and really just worked my way up. So I always dealt with mortgage brokers, always had a passion for working with mortgage brokers and just sort of the back entry stuff. So learning your craft, learning documentation, learning sort of pre-assessment stuff, learning sort of credit analyst stuff. And then I spent a couple of years over in London and worked for a mortgage broking company over there, which is it's a little bit of a different industry in the UK. But then I came back and then I was sort of a BDM support and then progressed to being a BDM for about 4 or 5 years before, making the jump to what I call the light side now, not the dark side.
Exactly. It's plenty of light and plenty of opportunity on this side of the fence, that's for sure. So interesting. So that's how we sort of cross paths. I remember you back in your NAB days. I think you helped me with get a number of my tricky investment clients over the line. And in terms of, just going back though, in terms of with your background and especially London, right? Because I've traveled over there and seen their mortgage market. What do you think the biggest takeaway you took from working in a place like the UK mortgage market was?
Yeah. I mean, the UK market is, it is a little bit different. I guess it's heavily focused on selling insurance and risk insurance and life insurance. So, I think Australia sort of went through that period. Maybe 10 years ago, the buzzword was diversification. And one of the banks I work for, was not only did we have a sales target with mortgages, we had a sales target with insurance as well. So that was sort of a different learning experience being over there and, just sort of learning the ropes. And, they've got qualifications and sort of you've got to be a qualified person to actually be a mortgage broker over there. So that was a good grounding. And I think, coming back to Australia, the BDM role, it started to become more advanced and, really learning my craft as a BDM, being on the road. I've lived in Sydney all my life and I used to look after brokers in Canberra. I used to do the track up and down the highway every year. So just sort of, that determination, getting out there, meeting brokers, understanding the mortgage industry. And it got to a stage after 3 or 4 years where I was probably training and coaching brokers on how to actually read tax returns. And I was probably knowing more than a lot of brokers that I was there, there to assist. And that's where it really sort of the light turned on. And, I thought maybe I need to be on the other side of the fence assisting clients and not brokers.
Yeah, I can definitely relate to that. When I started, I was in Wizard Home Loans in their head office for 2 years. And I did a business development role where I'd work with their mobile brokers and I'd go out on the road and do coaching and training. And isn't it a great grounding because you get experience and you see, what the best brokers do well, right? Coming from the other side of the fence, you see what the best brokers do well. So, and I guess, what are some of the things that you took away that you made sure you implemented in your business from day one, knowing what you did from being part of that third party space.
Yeah, I mean, that was it. I was in brokers that were writing 100 mil plus, offices 10 years ago. That was down in Canberra predominantly, so smaller loan size. So just looking at the whole office setup and, how the broker was, I guess, the face of the business, how they sort of scaled their model, how they had back office support and things like that. So I took little snippets from that. The big thing for me was, I think, that BDM mentality. And I still see it today, Ross, where a lot of a lot of brokers online and certain online forums, it's really hard. How do I actually get deals? But when I started, and it wasn't that long ago. I mean, I've only been broking for about 5.5 years, so it's not like I'm one of the old brokers that had the good times. I face the same challenges that brokers that have been in the industry 15 years. So I thought, how am I actually going to get leads and get them quickly? And the old BDM mentality, it was just knocking on doors. I'd go to open homes around my local area, I'd print off the local, open homes and go out there and meet the real estate agents. I'd use LinkedIn, social media, 100 invites. Hey, Ross, how are you? This is who I am. This is the value that I can actually add. I might get 10 replies. I get 5 coffees, and I built 2 or 3 relationships on the back of that. And that's, not many people have that mentality. A lot of people are afraid of that rejection, and that sort of really stood me apart. I think in year one, and it's not beating my own chest, I think I settled around $60 million in year one as a broker 5 or 6 years ago. And it was really those activities of getting out there, don't be afraid of getting a no, that really sort of built, my client base quite quickly.
It's interesting, right? And it's, a credit to you, and, coming from that business development relationship, knocking on doors, doing all those activities that seem simple, but a lot of brokers really struggle with. And, I was working with my Momentum crew, which is just, entry level brokers looking to get to 3 mil a month fast, right? And to get to that level, it's 1 lead a day, right? All they need to generate 1 lead a day, 1 referral lead a day. And it's not 1 deal a day, it's just 1 lead a day. Yet people struggle to focus on doing the right activities. Now you did 60 mil in your first year, so you're probably generating around 2 to 3 leads a day, right? By just focusing on doing the right activities, right? And you mentioned what they were, but a lot of people, again, in terms of, we'll get into your numbers in terms of your figures in a little bit, but to write, a couple $100 million in business within, 4.5, 5 years is a great feat. And a lot of people wouldn't even think that's possible, right? But you've shown it is possible.
Yeah, don't be afraid of the no. Yeah, that's the key sort of takeout. You're going to get no's, and then I guess just what is your value proposition? Just quickly on that, Ross. Once you do meet a prospective referral partner, how do you differentiate yourself from the crowd? And me, it was I'm a BDM. I've had credit analyst experience. I'm an investor myself. I sort of focused on that investment path or journey, dealing with, working with like-minded investment people. So it's not just about getting, hey, I'm happy to meet you. It's how do you then obviously add value to that referral partner's business and their clients, more importantly. So.
Exactly. Back when I started, we were competing against the banks, right? And brokers had a very small market share. Now it's different, right? Your 70% of the market is taken by brokers. So we're not competing so much against the banks anymore. We're competing against other brokers. So if you just do the standard things that other brokers do, we can find you the best loan, find you the best product, then there's no differentiation. So what you're saying, and I'm keen to understand your differentiation, because I know that's a big sort of area, and it's been, sort of critical for you growing the business. So talk to us about, how you sort of position yourself in that property investment space and the value that you offer to attract the business that you do.
Yeah. So, I mean, I really went down the path of, trying to partner with, whether it's buyers agents or really playing that investment space. And it started just because I was an investor myself. in my early 20s, it was sort of a passion and a hobby. And, I started accumulating a few properties, and that's sort of, what I thought I was good at. I used to do a lot of reading and all that kind of stuff as well. So, yeah, like I said before, I mean, I did go out and meet a lot of real estate agents, but I found where I had the most traction, the most value to give were, buyers agents, differentiating between different policies for investors versus owner occupiers, really putting a stamp on the value add that I can give a buyer's agent and their clients. And you hear, I don't say this to everyone, you hear the term fake it till you make it. I think the first relationship I built had been a broker for 1 week. I told the buyer's agent I'd been a broker for 2 years. And it started from there. So I'm not saying everybody out there that's listening today has to lie about their credentials. I could sort of back up, I knew I'd worked in the bank, I'd done the BDMing, I'd been the credit analyst as well. But more importantly, I was confident that I could sort of back up my skill set around assisting their clients. And it really started from there. And ever since then, we've sort of just grown. We don't have a huge amount of referral partners. We might only have 3 or 4. So it's not like you need to go out there and build 10, 15, 20 different referral sources. But, with that, and then with doing a good job for their customers, finding the ability for them to potentially lend more where other brokers can't, that then you start to get a name in the industry. Existing clients start to refer on to other friends and family. And it's just grown from there, mate.
Yeah, love it. I'll sort of rephrase what you've said and put in a way, the listeners can view on it. But I guess, what I took away from what you've said there is find something that you love, find something you're passionate about. So for you, it was property investment. Get educated. As you said, you used to educate yourself. You read a lot of stuff on property investment to grow your own portfolio. So get that base level of education and become the expert, because if you're that knowledgeable expert, then you're going to be able to add value beyond the transaction. Right. So
correct.
And a lot of brokers are transactional and just think it's about doing loans. But what I love about what you said, you're adding value beyond the transaction, because these guys, and I come from a property investment space and I'm a property investor myself. And so I understand what you're saying, because when you're talking to, say, a buyer's agent or an accountant that sort of deals in that space, you can talk on the same level, right? You understand their challenges. You understand, their aspirations and how they want to structure a deal better than somebody who hasn't got the experience or the wisdom that's gone out and done it themselves. So I think you going also doing it yourself just makes it very hard to compete with somebody like yourself.
Yeah, and I guess that's the mindset. The value add from a good, a broker to a really good broker. It's not just a transactional relationship. We're sort of mapping out what their second, third, fourth purchases look like. Often clients come to us and they're not in a position to purchase. So it's around sort of mapping a plan out. What do they actually need to do to go away and actually put a savings plan in place, or whatever it may be, to actually, get on the board with their first property. So a lot of brokers just say, well, you don't qualify, see you later. So we actually put plans in place, and those clients are very sticky. Then they come back to you for your second, your third, your fourth transactions as well. So
exactly what you're saying. And it's not just then their first property with a property investor, it's then the plan for the portfolio, right? What does that look like? How does that expand? And what are some of the things that you do, and what are some of the conversations look like that you have when they're coming back for their first, their second, their third?
Yeah, I mean, one of our value adds is, the borrowing capacity to start with. So we, like I see it all the time, I guess brokers use on average 60 lenders only. So we're not reinventing the wheel. We're using the same figures that broker A down the roads use, but I guess we understand which banks are more investment focused, which banks have higher borrowing capacities due to certain policies and things like that. So that's part one. And I would say sort of 7, 8, 9 times out of 10, a client could potentially, doesn't mean they have to, take out the lending can potentially, get more money with our offers just because of we understand the investment market. And yeah, like I said before, it's not a transactional relationship. It's really sort of mapping out what property 2, 3, 4 was looking like, understanding which banks give sort of higher valuations. Lender A might give you this, lender B might give you that. Therefore, we could pull out this amount of equity as well. So it's really sort of mapping out a plan from a lending perspective, from a valuation perspective, and, a borrowing capacity perspective as well. That sort of really puts us in front. And yeah, I guess understanding more advanced strategies as well in that investment space. So, personal borrowings, trust borrowings, and there's various other things as well. So and that's come with experience over time, where I've read, I've researched, and, we've been sort of doing this for some time now. And that's sort of, as I said, we get a lot of good feedback from that, Ross.
I know from myself doing those reviews, and it might be something simple, right? Like extending a loan term from 20 years, refinancing it onto a 30-year term, or looking at, converting some debts to interest only. And the difference between doing a couple of small changes like that can mean the difference between buying, one property or 4 properties.
Yeah, sorry to interrupt, mate. Yeah, that is the key. So clients are surprised. Wow, you can get me so much more money. And disclaimer, it is about responsible lending. But it's using the same figures and using strategies, whether it's extending terms or using second tier lenders. I just find a lot of brokers just focus on their 3 or 4 major type lenders, and you're missing an opportunity there. And that value that we then add, not only for that initial transaction, but then future transactions beyond that allows, not allows, but that gives us a good name in the industry, and more clients do come back for that 2nd, 3rd, 4th property.
Yeah, that's been great. I think that's gives people a good insight into your key business and how you've sort of built the referral partners. But you get to a certain part where your sort of success comes up to you, and we've been working together for the last sort of 12 months. So I'd love to talk, if you're open to it, about your journey around scaling your business.
Yeah.
Because, when we met 12 months ago, what were some of those challenges that you were having? If you can sort of think back.
Yeah. So as you said, Ross, I think you and I have been working together for about 12 months ago. And, as brokers, you just want to go out there and write business. It's 10 mil, 20 mil, 30 mil, 40, whatever your goal is. And then, the sole focus for our business in the first probably 3 or 4 years was just on the front end stuff. You're pedaling that hard, trying to, keep up with all the leads and, service your clients in a really good manner. And yeah, it sort of just grew over time. I mean, I guess for the listeners out there today, one of the first steps that we took, we had a couple of Australian team members. I think when you and I spoke, there's probably 4 of us in the Sydney office. But we also had an offshore team as well. Where we had sort of 2 or 3 good relationships with a VA overseas that could do a lot of that below the line tasks, I should say. So things like valuation ordering, pricing approvals, doing compliance paperwork, and applying line, all that kind of stuff that, you put a dollar value on it, and there's not much dollar value assigned to that. So that was one of the things initially we really focused on, and probably before, a lot more brokerages are moving down that path. But, 4 or 5 years ago, we had our first VA. Virtual assistant. So that was part of it. But then you and I came across each other, I think 12 or so months ago, as you just mentioned. And yeah, I guess I was at a crossroads. I was probably doing 16-hour days, 5.5, 6 days a week. And, there was no real focus on our back book. There was no sort of training manual. There was no sort of defined roles within the business. I didn't know who I needed to hire next. Was it admin support? Was it a broker, et cetera, et cetera? But yeah, in that 12 months that we've been working with each other, I mean, the team's now grown to, we've got 9 in the Sydney office. We've got 5 VAs as well. And there's a lot more structure in the business itself. And there's a clear pathway for people coming into our business now about how, you can start your career in mortgage broking and how you can sort of progress through each step to then become a fully qualified and good mortgage broker. So.
Yeah, exactly. And I guess, that career progression and showing the brokers how they can deal with you and obviously where they start and what those steps to get, whether that's to be a broker or a senior broker or a partner or whatever that is important. And I guess where that sort of came from was around you had a situation where one of your brokers left during the year, and we spoke about the importance of having building that team and building that culture.
Yeah. And that really, I guess, shone a light on, our business. And, somebody once said to me, I mean, you're trained at how to be a mortgage broker. You're not trained to run a business. So, I've sort of dabbled in a few things here and there. And that's where you and I obviously came across each other 12 or so months ago, because, I knew the mortgage broking part. I knew the technical part, but actually trying to scale a business, so we can support our clients, we can build a better culture, as you mentioned before. And more importantly, give me a little bit of work-life balance back as well. I've got two young kids, as you know, Ross, and, the 16-hour days, they're only sustainable for so long. So, and, looking back, even my team commented last week, we did a business planning session for 2023, and, they all commented, the ones that have been here for 12 months, how much more structured the business is, how all the roles are more clearly defined. And just back to your original point there, we lost a broker. I guess key person risk within a business probably resonates with a lot of people. And yeah, it was basically three brokers, including myself, and one of them moved on. It was all amicable, but that then left two, myself and somebody else. And at that time, mid last year, the business started to increase with referral partners giving us more and more leads. So it just became almost non-sustainable, that model, from my side of things in terms of family, but also the business as well. Like, if I lost that other broker that was still within the business, what would that do for me? What would that do for the business model moving forward? So that's where you and I had a deeper conversation, and, how can we sort of get some key people in the business and have that next man up mentality, where I'm trying to build that army of brokers now.
Love it. And I guess when you look back in terms of, some of the things that we put in place, what has been, and you mentioned the team feels like there's more structure. What in particular do you think are some of the things that have given you more structure?
Yeah, I mean, clearly defined roles is one. I know that sounds very simple, but I was doing everything, like literally, broking, growth strategy stuff, CEO hat on, below the line stuff, recruiting, this, that, and the other. So now I'm delegating a lot more of that stuff to, certain people within our team. So that was one part. I think when I say clearly defined roles, I mean the credit analyst role, which may or may not be familiar to some of the listeners today. That was just something that we never even contemplated. We had one broker, he came through sort of the junior level position and then advanced to being a broker. And yeah, there was just a gap there. And we never thought about that credit analyst type position. And the analyst role is to support the senior brokers like myself. And, there's one or two others in the office. How can we get them doing more face-to-face sales activity and all that below the line stuff in conjunction with our VA team, our post unconditional team? How can we actually get them doing a lot more of the dirty work, dealing with banks, dealing with clients, all that kind of rework stuff as well. So yeah, I think part of what we introduced on the back of our work, Ross, is we introduced two credit analysts into the team, and I mean we've seen the results in 6. I mean, my analyst has been working with me for about 11 months now, but Joel, one of our other brokers, he's had one for about 6 months, and I mean our growth in terms of volume settled between myself and Joel is, I think I was up about 70% last year. So,
and because some people, who invest in brokers, again, should they get a credit analyst for the broker? What has it meant for your broker providing him sort of additional support and getting him a credit analyst?
Yeah. So, I mean, the model we have now, I mean, if you are a broker in our office, I mean, we have them, they get VA support. So all that compliance stuff. But I mean, Joel's a good example. He, like on average, I think the last 3 years settled anywhere between 40 and 50 million. And we introduced a credit analyst to him last year. And, Joel sees the client. Joel sort of recommends which bank the client's going to go to, and then the credit analyst takes over serviceability, additional documents, liaising with that back office team. I mean, Joel's settlements last year, I think he was about 95 million. So he's gone from 50 mil, 50 mil, 50 mil up to 95 million by doing the same amount of hours by introducing a credit analyst into his team.
So you've increased your business by about, you said 70% plus, and he's almost doubled his business. So by going from that sort of, 50 to around 90. So similar results, right? So I think as a message to the listeners, if you are thinking about investing and, obviously structuring, that is obviously a key position. If you can obviously, do that. And I think, what we've sort of done with the systems, the process, the job roles, and then you obviously letting go of control a little bit, right?
Yeah, I mean that's a key one there. You've hit the nail on the head. It's letting go of control. It's a trust system as well. Nobody can do everything as good as what you do, but it's, as I said, it's not sustainable. Like, we're trying to scale a business now, a profitable business moving forward. Plus, I'm trying to obviously get a bit more work-life balance back into my family life as well. So it's about, hiring key positions within the business and, letting go, like having faith in your systems, your processes, and, their ability to deliver the outcome that you would to your clients and the key stakeholders as well. And I think you and I were having a brief chat yesterday, Ross, and like I settled 70 million more than the previous 2 years. And I actually said, I think my hours probably per week have gone down about 10 hours per week. So I'm actually doing still big hours, but I'm doing slightly less hours. And by introducing that credit analyst, I've been able to write another $70 million worth of business last year. So it's huge.
Oh, it's huge, right? Huge. And you look at it from, some people have that conversation around, should I hire a broker or should I hire a credit analyst? And, when you're saying, okay, and you look at the revenue increase, you look at the cost of your credit analyst, and okay, in Chris's case, he's increased his revenue by $70 million in settlements, which is 450,000, call it. And the cost of that person, right? Whereas, would a broker been able to write that 70 mil, and what would be your profit share depending on what they wrote, right? So that's where the sort of decision and, I guess, where and how much you want to write. And some people feel writing an extra 70 million, I'm actually going to spend more time. But in Chris's case, you wrote an extra 70 mil and actually spent less time, right? So this is a perfect sort of example of, that sort of catch-22 situation that a lot of brokers find themselves in terms of their decision to scale. Should I bring on additional brokers, or should I bring a credit analyst first? And I guess, we've spoken about this, and you went down the credit analyst path first, but just because you go down the credit analyst path doesn't mean that you can't develop them into a broker later on.
Correct. Yeah. And when I've said before, clearly defined roles, I mean, that's the role is now, like, we have sort of an entry level position, and then they progress to being an analyst. And then after they've, 12 or so months being an analyst, they then progress to actually being a mortgage broker in their own right. And my analyst has been with me for 12 months now. He basically knows everything. Like, I have confidence. He deals with credit managers. He deals with clients. He knows more about the transaction after that initial meeting that I've had. Like, I know we did a lot of modeling on it, but we would never go back. That analyst role within the business, that's here to stay now.
Definitely. And one of the things we did chat about yesterday was the three sort of phases, right? Where in your business, you've set up some really good foundations now, and you've got some really good growth off the back of that over the last 12 months. And then, what comes next for you, and you mentioned it earlier, is, how can I actually, write less and step out of the business? So you're right in that phase now, right? And so what are some of the things that go through your mind when you're sort of pondering that decision, right? Do I continue to write, or do I make that decision to step back? And some of the challenges and sacrifice, because it takes a bit of courage. And I know you're sort of weighing these things up. So for the other sort of listeners who are in a similar position, it'd be interesting to see what the things you're weighing up are.
Yeah, I mean, let's be honest, one is profitability. We're not going to hide from that. The deals are more profitable if I'm writing them, and not my team. So, that's one thing you've got to weigh up. I guess skill set as well. And being able to handle the volumes that we do. I think we settled circa 300 million last year. So it's not a case of Chris simply just pulling the rug out and saying, I'm done as a broker. Good luck, guys, to my team. It's a slow transition. So we're sort of contemplating how do we actually manage that in the next 12 months, where, I would still be writing in some capacity, but I'm not doing the volume that I am at the moment. So like they're two of the key things. You and I had a chat, I think, towards the end of last year. Like, how do we actually then introduce that to our clients? Like, what is the strategy around introducing my brokers now to, clients I've been dealing with for 3, 4, 5, 6 years? How do we actually do that as well? But, our business, I think, is at the stage where I need to take the more strategic CEO route for the business. And, I guess having that direction and, having those clearly defined roles and that sort of training system where you can come up through the ranks and, be an analyst is actually helping me now to slowly, pass more of my clients onto my team of brokers. So, yeah, I mean, that's it. Like I do sit up at night sort of contemplating what to do. But, it's not sustainable doing 16-hour days every day for 10 years.
No, exactly right. And I think a lot of what you're saying, and I think, the point, and I found this in my business, that was a great way to go to build, to have them in your processing team and to grow through, especially in the types of deals that you're doing are not, they're technically challenging, right? There's people with multiple portfolios. You've got self-employed, you've got trust, you've got self-managed super funds. And, I used to say to my credit analysts, no one gets easy deals, because we'll throw you in the deep end, because you've got to be able to handle whatever comes across your desk, right? So by growing them through your process like you're doing, you give them such great experience that there's no way they could get any other experience like that unless they're working under you as a credit analyst, right? Because as a broker in their own right, wouldn't cover that type of deal, right? They wouldn't have the experience to do it. But, one of the real benefits in the model that you've chosen is that they get a really good training ground by doing that credit analyst role.
Yeah. And I say this to, like, I've had a couple of clients that have turned into being brokers within our office. In all due respect, like anyone can be a broker. And I say that. So, you do your training course, you can be a broker out in 3 months. But I guess what we try and build with our team is, get that match fit mentality, learn the ropes, learn the back office, similar to when I was at BDM. This is what the best officers are doing. Come up through the ranks, learn your apprenticeship almost, become that analyst. You've had all the different scenarios thrown at you. And then, when you're actually out there as a broker, our team are writing 40 million almost in their first year, because they've done the training beforehand. They've done their apprenticeship. So, and that's the key difference. And that's something that you and I have been slowly trying to build within the team, from a culture perspective, but also a training perspective. So I can obviously scale the business and, as we mentioned before, try and write less deals moving forward.
And I think, from what you're saying in terms of, and some of the challenges and in stepping back from writing, I guess why a lot of people get stuck in the writing role and never get out of it is because it takes a vision, right? It takes a strategic direction, because phasing yourself out from writing, I think you said you did about 170 mil last year. So from going from 170 mil and the revenue that creates to, zero over time takes a plan, right? And part of it you've started to implement already. But it also obviously provides that career pathway for your clients coming in, because you can say, hey, this is the plan, this is the option, the business is there to be written. We just need good people on the ground to be able to write it. But unless you've got that longer term vision, which a lot of people don't take the helicopter view, they're just so busy pumping out deals. And I know the volume of deals that you do and the hours that you work, you get to that point where you get decision fatigue, right? You get decision fatigue because even though you're not actually processing the deals, you're still making a lot of decisions about where they go, why they go, and if the deal catches fire and you need to put it out, it's still coming to you to be able to put out, right? So then, and not only that, you're wearing obviously all the other hats, which is the CEO, the head of marketing, the head of finance, head of recruitment, head of training, all those things as well. And this is where really having that longer term vision on, well, okay, what is my role? What is the things that I love in the business going to be? And who do I need to support? Because you've got the delivery system in your business now. And I guess the next level is getting a really good operating system in your business.
Yeah. And like you said, I mean, like we have come so far, but we're by all means the finished product. I mean, we had a chat yesterday, like what does the next 12 months look like? There's been a big focus on our existing book. How do we sort of formalize that process a little bit more? Do we add management layers into the business as well, which, there's a lot of work still to be done in that space, I should say. But yeah, like you said, having that helicopter view, do you want to be writing deals forever? If not, how do you actually then sort of go about putting the plan in place, hiring the right people, and growing that team internally, so you can actually then start to step away from the chief of everything really inside of the business.
So same way you had to let go of the control in terms of writing the deal to a credit analyst, and you don't know how that's going to work, but you invest ahead of growth. And it's interesting, at each level of growth, there's these trade-offs that you have to make, right? And it's interesting. It takes a lot of courage, and it takes that sort of planning and forethought to make it a little bit less scary, so you've got more confidence to be able to do it.
Yeah, 100%. Yeah.
And I know, another thing that I admire about you is you are a lifelong learner, right? So what are some of the things that you do, to develop yourself?
It's a good question. When I say I hate reading, but I read a lot. I don't read books. We play in that investment space, online forums. I sit there scrolling at night and, I'm looking what people are saying. I'm looking what other brokers are saying. That's how I sort of taught myself to be a broker. I was on the online forums and just checking out experienced brokers and what they were saying, different things. You always pick up something new. I always say to my team, read all the, broker communications that come out, the advisor and all those type of things. Knowledge is power. Like if you can sit in front of a client or a referral partner and they give you a scenario and you can say A, B, C, D lender will do it, credibility is automatically built. So learn. You're always learning. There's snippets here and there, online forums for brokers. I've gone down the coaching route with yourself. And I think I highlighted before, I was taught how to be a broker. I had no idea what it was like to run a business, and I had no idea how was I going to get off the tools. How can I actually scale a business? I was literally a deer in a headlight. So, looking at things like that. And yeah, as I said, that's, I like reading. Learning.
And you were telling me, and I know some of the podcasts that I've done and other podcasts in the industry. So you're constantly listening to different things. What sort of stuff do you listen to?
Yeah, podcasts. I think it was a shining light when I was overseas last year. I think you had Nick on one of your podcasts, and I think his words were, "You've got to take a pay cut to scale a business." And it was the light that shone on when I was in my head, and I thought, you know what, now's the time. I've talked about this for too long. I need to obviously invest in the business, invest in the right people. So podcast is a huge thing. There's social media, Instagram, TikTok's a bit of a not really my thing, but more people are getting on there as well. It's a good, like Instagram, social media. It's a good way to meet potential referral partners as well. Send them a message. Hey, this is who I am, and I've picked up one in the last week just by doing that. So, yeah, just all those things: social media, online, reading, lurking, broker publications, all that kind of stuff. Because if you can get one little thing out of that, I always say to my team, you're always learning in this industry. I've been in the industry almost 20 years. There's things you see every day and go, what was that? Or what was that policy? Or where did that come from? So, yeah, knowledge is power, as I say.
I couldn't agree more. And it's a great industry for learning. And again, from yours podcast today, there's been so many gold nuggets, a lot of things that people can take away. We'll sort of wrap it up there. But one of the questions I asked, in wrapping up is, what would be your one piece of advice for someone who's really looking to get in and grow and scale their mortgage broking business?
My favorite saying comes from Tom Panos.
Yeah.
When I started. This is for newer brokers. And I went to an advisor event. I must have been a broker about 1 week, and he said, hustle beats talent, and talent won't hustle. And I stuck that on my wall. So hustle beats talent, talent when talent won't hustle. So, I'm not the best broker out there. I'm not the best presenter out there, but, I'll try and out hustle anyone. And, don't be afraid of no's. And that has always resonated with me. Work a little bit harder. But I'm at the stage now where I'm all about working a little bit smarter. But that's probably the one bit of advice. And, for the more experienced brokers out there, take a leap of faith, invest in your business. In 12 months, we've seen substantial growth from myself and Joel and a few other brokers just by implementing a few key people in credit analyst roles. And I'm actually doing less hours and $70 million worth more business last year. So don't be afraid to, take a pay cut, invest in the business, and, trust your staff, because you'd be surprised what they'll actually do. So
love it. And, wise words. So thanks very much, Chris. Thanks for being part of the $1 Billion Broker podcast.
Thanks, Ross. Beautiful. Thanks, mate.
So if you've enjoyed this episode, there's a number of ways that you can stay in contact. One, subscribe to the podcast on your favorite podcast platform. Two, join our Facebook group, $1 Billion Broker for Mortgage Brokers. We share lots of great insights and tips there. And if you are interested in being coached or joining one of our coaching programs, reach out to us. Go to billiondolarbroker.com.au and book in a time, and we'd love to have a chat to see how we can help you. This has been another episode of the $1 Billion Broker podcast. I'm Ross Lacane, and I'll catch you next time.